Fosl, FOSL, NASDAQ, Stock Exchange. And what do we have here? 10 years data, monthly candles. And whoa, see how what happened here? All right, let's go to the beginning of time. Hindsight 2020. All right, doesn't matter. Okay, we had bottom formation here. Let's go back. Okay, there we go. So right now I have my resistance line back in the days. And this was a breakout candle. Again, with these candles that break out, but that they don't start within that important support. You could use the previous candle's close, bottom of wick, as the ultimate support for your sell stop. And I know you're supposed to put it at the bottom of the candle of the breakout, but if it's on the line, this is just too dangerous. There's a possible test of that line. There's a possible test and even sink within before it bounces back out to close above that important resistance line. So to put chance in your favor of not getting whipsawed and of reaching your possible target, use the previous candle as the to measure your sell stop. So your total risk would be, you would enter here at 37.77. Put your sell stop here at 31.28 or just below that. And that's it. From top to bottom here, that's your risk. What's the measured move? Oh, let's look at the reward. We look at the risk, but always fun looking at the reward. And this is the reward. Money, money, money. And yeah, that's not the attitude to have. When you start thinking about the money, that's when you let the emotions creep in. Keep it funny, keep it light. And here's the target right here at around the 60 level. What I would have also done, I don't have data before that, so I don't know if there's a previous wall, previous resistance turn support, vice versa. But I do know this is a round number here, 60. So I would cheat. I would bring the target just a little bit inside, 59, 48, right about before that round number. Reduce my reward, thus lowering my risk to reward, but at the same time increasing my chances of reaching that possible target. So all right, let's move on. Breakout. Oh, doesn't look too good. Lots of emotions here. Oh, what did I do, Pat? I shouldn't have went in. I should have waited for a better breakout candle. Oh, a wrong trade is a trade that you don't respect your trading framework. It's not what happens with the price action. Nobody knows what the price action is going to be. If if the market needs more time to go to your target, if it starts forming other patterns, that's not up to you. What's up to you is doing your risk to reward, taking into account your considerations before setting that final target, your profit limit, and that's it. Price action moves 1 month, 2 months. It's red. Wow, it came so close. And what I've been calling emotional landmines is exactly this. Imagine you're here. You've been in 1 month, not going too good. 2 months, and I don't know what price action during which day of that month that candle happened, but started getting closer. You could have said, I'm going to pull the trigger. I'm going to cut my losses. And that's an emotional landmine, using emotion that you step on and it just explodes in your face. And then what you do is you sabotage your own trading framework, thus skewing the results of your, when you're going to evaluate your trading framework at the end of the year, your success ratios and all that. It's not going to be based just on targets not being reached by the implied measure move. It's going to be because you stepped on landmines, emotional landmines, and you sabotaged your own trading framework. That's the bad part, monetary loss. But there's also the on your confidence, your capital, your emotional capital. It takes a hit, and after that, well, you could learn from that and try not to repeat that mistake again, or eventually you could just crumble and just give up. Hope that doesn't happen. Make mistakes. I make mistakes all the time, and sometimes you don't know why, but most of the time it's because you stepped on an emotional landmine. All right, time moves on. Oh man! So now you're lots of landmines there. Was the timing off before to go out? Did I misjudge the breakout line? A whole bunch of stuff like that could have happened. Was the breakout line? Was I greedy in doing it there? Was it more? Was it shorter there? Sometimes you don't always see that. Don't say you're right or wrong based on the outcome, the price action that happens. If it would have just skyrocketed, you could say, I was right. And then the next time you draw the lines the same way, and then the result, it goes like this. It stagnates before. Look, it's humans buying and selling. And these charts represent human behavior. The going up, the greed, the fear, emotional landmines. The guy has, I'm doing my sell stops. Well, when he's selling, he's actually influencing the price action. So don't worry about it. Just respect your risk and money management. Don't lose more than 1% per trade, and you'll be fine. Trust me. And bang, bang. Oh, there you go. Happy you didn't step on any landmines here. The price finally went up. 1, 2, 3, 4, 5, 6, 7 months, and it continues going up. Cool. I'm rich. Well, you're not really rich. You risk 1% of your NAV. So let's say you have 100K, you could have lost 1,000, and your reward would have been the reward from top to here. 1, 2, 3, 4, 4.5. So the risk to reward, I think it's 1 to 4.5. So you would have won 4.5% of your NAV. That's 4,500 in this case. So that's it. I believe, I don't know where I heard that one time, but 9 out of 10 millionaires, like new millionaires in the year, they already had the $900,000 at the beginning of the year in their bank account. So it's not somebody from 10,000 that went to $1 million. It's already people that have been repeating the same trading framework, same whatever they've been doing, and it's just time. It's just a question of time. Money is equal to consistency over time. Just be consistent over time. Keep it simple, and you'll get there. Yeah, that's the only way you should see it. That's the only sane and safe way to do it. Or else you're just gambling, and that does not end generally well. All right, what else happened? Went up. Oh, here we go. Top. That moment, that was a top. And this is how I draw my first initial support. Let's say, okay, I'm going to go back here, back in the past. Here's the top. And then, okay, I have a red candle. Here's my top, but where's my resistance, my support? I go back to the last red candle I had, and I just draw a line from there. And for me, that's important support. I had a close that didn't go below the close of that red candle, and that's just a starting point. After that, when candles add and they morph, then I adjust that. And just to give you an idea of what possible range I have, you'll see me do that sometimes when there's no actual chart pattern. I'll do a line like this, and then I'll say, okay, this is a possible move. But until the pattern forms and actually completes, this means nothing. It's just to give you an idea, to get ready, prepare your brain. There you go. These are the two moves I would have drawn. All right, let's add some more candles. And now it's tracing out. And finally, we could forget that one here. Here's the... so you could actually start drawing there. Yeah, right here. What I don't like it here is there's not many candles testing. See, there's only one test here. I would have liked to have more tests here before considering that a breakout. It could be a valid pattern. Is it an A++ setup? Probably not. Would I have played it? Probably not. And since it's not an A++, then I believe it has lower chances. It's a setup that has a lower chance of reaching, low probability of reaching that possible target. Doesn't mean it won't reach, but it can have false breakouts and whatnots. Wow. Okay, where am I? 2014. Okay, let me remove all those lines. Remove all trend lines. There you go. Okay. Here is my support. And my closer resistance is right here. Oh, candles. Again, same thing. I would have liked to have more. Let's see where this brings us. Top to bottom. Add it to the breakdown line. Oh, what? It's going. Where's this going? 15. Come on. And this is the same thing I see today, guys. I have some charts, especially on the TSX, ENB, and they have these big tops, double tops, whatever, head and shoulders. And then you see it's 70, and some people bought in the hundreds, 95. I can't go down to 15. Come on. Can't go down to 15. Well, I don't know why it can't go down to 15. It's a value on a chart. There's candles. It could go to 0, right? It can't go negative because charts, I don't know. Maybe it can go negative. I don't think so, right? At 0, it's game over. But why not, So don't be biased. And I could have easily, if the price target would have been going up. Let's say we have more candles here. And it could have been an arrow going up, added to the breakout line. And see, that could have been also a target here, but you got to remove these words. Crazy, can't happen, it's improbable. Well, anything could happen. Just wait till the price action dictates a pattern, and after that, you just go in when it's time. And oh, nice! I would have loved to be in this one. Look at that! Da-da-da-da. Oh, pulling back. Scared, emotional landmine, the candle going in the opposite direction. You start freaking out, start looking for reasons to exit or to stay. 30 days, man. 30 days of going up, or at the end being up, net up, all this much. I don't like trades that go against my nav, but it's a trading framework. You have to respect it. I put in my sell stop, I put my sell stop here, I put my buy stop here to stop the loss, and I put my profit limit here. I don't change it after. I've done it before in the past, and why would I change it one time, not change it the other time? Did I change it the wrong time and finally to see the price action go towards the target? It just jeopardizes the whole reasoning behind having a trading framework and there's so many emotional landmines out there. Why create your own? Cheat at the beginning, reduce the reward if you have to, put yourself on the correct side of the target. Like right here, maybe I could have cheated and put it, see the targets were at 615, 1540. Maybe I could have put it at 20.10. like just above that 20 line maybe, if I were to increase my chances of reaching a target. And if you fail, well, it fails, and that's just 1% of your NAV. And it's taking forever to go down. If I would have put it before the 20, I would have got out, round number, and what's the target here? Yeah, I think I would be reaching it here. There you go, that candle. So big top, 1, 2 years, 3 years tops, and after that 1 year, 2 years in the trade. Man, honestly, position trading is hard on the emotions, unless you lock and load and forget and don't look at the chart, or if you're a robot. Okay, so here we are today. So this massive top reached its target, and now doesn't seem to want to go lower than this. There could be a bottom here, and candle going up. So where is my last resistance? Well, where's my last green candle? There's one here, and small ones. Could be here. So you have a 1, 2, 3, 4, 5, 6, 7, 8 month pattern. Could have a small arrow here, add it up here, and then start climbing up all these levels where there's resistance to eventually maybe have more candles here, and then play the bigger move up. Nothing to play right now here. What I would do is I would just add some alerts. Wait for some candles to be added. And see if this becomes an A++ setup. If it doesn't, well, I still have alerts at other levels. And I'm fine with that. No problem there. Alright, so I did a lot of reverse engineering on the fosl. I hope it was useful to see more deep dive in my trading framework and how I approach things. And it's all about the process and practicing it. So the time that you get to A++ setup, you're confident in what you're doing, and you don't forget steps. It's practice, practice, practice. Go through the routine, and when it gets down to D-Day and you're all excited, well, at least you'll have the mechanics ironed out in your subconscious. All right, guys, that's a long one. See ya.